Or next week, September 17th.
Hello and good afternoon to all our viewers. You're watching Countdown right here on Bloomberg Quint. Lackluster day of trade in the morning has turned into some amount of pressure building up towards the latter half of trade, with the indices losing closer to about 0.5%. Let's start off with the headlines for now. It's a lackluster start to the October series. The Nifty trades little change. Right now, though, the metals and auto stocks are the top sectoral losers. The GST Council has proposed to set up a panel to decide on levying cess to be used for rehabilitation post-natural disasters. And shares of Infibeam have fallen close to 65% ahead of its shareholders tomorrow. And despite clarifications on to be the top loser on the index, share prices have fallen to a 2-year low. Neeraj, good afternoon. I mean, today's session, while we're looking at the morning being a little lackluster, it looks like the pain has increased by afternoon. Oh,
yes, indeed. And in fact, that before we get the Nifty chart, actually, you can get the Nifty chart too. But the Nifty bank chart is really important because it slipped into the red. So bring up both. Look at this fall that has come in the Nifty, led by the Nifty bank, which was in the green about 10 minutes ago, 0.8% higher. And look at the fall that has come into the Nifty bank. So marginally in the green to being in the red right now. Well, 0.7. This is the Nifty 50. Bring up the Nifty bank. If we can get the Nifty bank up on the screen. Thank you so much for that. Look at this fall. It's come in. It was about 0.8% in the green and now marginally in the red. So the Nifty bank under a spot of bother, and that's dragged the Nifty along with it. So 0.7% down for the Nifty 50 as well. Bring up the heat map. And then look at the individual components. Yes Bank, Indiabulls Housing Finance and some of the others under pain. 14% for Yes Bank, 9% for Indiabulls Housing Finance. Now the stronger hands are also being taken out. The ones which have a rate sensitive nature to their business. So Hero MotoCorp down about 6%. Metals by and large has been the worst performing index today. Hindalco, Tata Steel, JSPL is down about 12-13%. I'm sure they will talk about it. Eicher Motors is down 5%. Bajaj Auto down 5%. The set of losers is not your ordinary set of stocks. These are stocks that are promising good business, but somehow not quite working out. So a lot of pain being countered by the HDFC twins. So HDFC and HDFC Bank about 1.5% higher. SBI about 1.5% higher. Some strength for a Kotak Bank and a couple of others, but that's few and far in between. A lot of pain in the rate sensitives. And I haven't even marked Infibeam. I'm sure you will. Points right, 62% down in the session.
5 the last I checked, but yeah, it could possibly be that figure. Neeraj, that's Infibeam for you. So started off in the morning. You saw it collapse from 25% to 30%. Post the morning show settled 50% lower and now about 64% in the red. So a big, massive cut. And look at the volumes. That's the most surprising part because the 20-day average volume is 7 million shares. That's 107 million shares that's already been traded. So it's a big, whopping pressure that's come on the stock. But aside from that, just want to quickly highlight what's been happening in the broader market yet again. So just talk about a few stocks where there is a little bit of green, and we'll talk about the losers in greater detail. But the key trends of the day following some of the gains coming in, stocks specifically like a Bajaj Electrical today seem to be holding on to some amount of gains, which are far and few in the market, in the broader market. Sundaram Clayton is the other one, which is up 2.5%. The list of losers is pretty long, and the kind of volume that these stocks have gone down, that is a little bit concerning. So a KPIT Tech yesterday was down 8%, today again is down 10%. You have a TVS Motors 8.5% lower. Ashoka Buildcon, that's about 6.5% given up. The other stocks like a Prabhat Dairy, Eveready Industries, I'm just naming a few. So you can see the kind of cuts that you're seeing in most of these names today. 7.5% for an Eveready. Volume specifically on stocks like a PC Jewelers, the stock is down closer to about 7 or 8 odd percent, and the stock has a volume of over 1 crore shares. JSPL is the other one, a massive knock of about 14.5 odd percent, with volume spiking more than 100%. Shri Infra is the other one, which is down about 8.5%. So a sea of red across the board. One of the next 1 hour of trade has anything else in store, but at least as of now, the pain points are pretty well defined for the markets. But let's see what's happening in the futures and options space. Agam joins in for that. Agam, good afternoon.
Good afternoon, Avinash. Until yesterday, it was about Nifty defending 11,000, and now we're seeing the Nifty move below the mark of 10,900. This is something that some of the F&O analysts were pointing out could be a little bit of a problem. This could actually mean intensifying selling pressure coming through. That said, when it comes to the Nifty at this point in time, we are seeing an increase of 4.5% when it comes to open interest towards shorts, even as the Nifty trends lower downwards. It's the same for the Nifty banking futures too. However, the increase in open interest is considerably higher. Of course, it's flattish. The Nifty banking index, the underlying is flat, but 21% increase in open interest. Let's take a look at the India VIX, whether or not this moved back above the mark of 17, and it has. It's only moved up around 1.2%, but it's still above the mark of 17. That's a little bit of concern. It's a new series. Let's take a look at the open interest distribution. This is where your levels currently stand at. You still have max OI around the 11,200 call. That's your upper end of the spectrum, and on the lower end, of course, it's the 11,000 mark, but this is going to change quite considerably. Let's wait and watch whether or not we do see maximum open interest in puts move further down to around 10,800, 10,900. In terms of stocks, I'm keeping an eye on Just Dial. That's the one which is declining in trade, and we have seen accumulation in open interest of to the tune of 25%. Shorts there, considering the underlying has declined by 7%. Well, some respite for Canfin Homes, which advances by, well, it's actually given up all its gains from just 10 minutes ago. It was, well, up 2% and it has fallen quite substantially. I was going to say longs, but it seems that it's not necessarily longs anymore at this point in time. Jubilant Foodworks continues to face downward pressure, down 2.8%. And I can't not talk about Infibeam. That's the stock which is also in the futures and options space. It's not so much about the, it's not so much about Infibeam's open interest as much as it's about the underlying. The spot price now down 63%, as you guys were just mentioning. There's a little bit of freeze when it comes to traders taking positions in Infibeam right now, because well, I reckon a lot of them will be struggling to take a position in this one, and will probably not know what to do with this one, considering the sharp fall here. Watch out for Infibeam, and of course the benchmark indices of whether or not they close below 10,900 today.
Frankly, it would be advisable not to take positions in Infibeam, such a volatile stock, and lots of rumors floating around why this could be happening as well. You don't quite know what is right, what's wrong, but better to err on the side of caution. That's right, as opposed to otherwise. But Agam, thanks for putting that into perspective as well. By the way, just to mention, while we spoke about individual names in the mid cap and the small cap space, the small cap index is down about 5%. Bring up the BSE small cap or the NSE small cap index, that's down close to 5%. That is a lot of pain. And can we get the YTD chart for this index? Because I think it will show a fall of northwards of 30% year to date for the Nifty small cap index. This year, 11%. Okay, interesting. No, I think the BSE small cap index, if you get that one up, it will show you, because just this morning we were looking at the kind of falls that have happened in the small cap indices. Yep, that's about 25% for the BSE small cap index. So the pain at the broader end of the market continues.
Well, you would have to have that, because you've got stocks like an Eros International giving up 14%, Gati is down 10%, Bajaj Hindustan's down 10%, Future Consumer 10%. I mean, the list is just quite, frankly, pretty long in terms of the kind of losses that have come in. But just to put into, perspective, Neeraj, it's not like the first time that we're seeing this kind of cut coming in there. And if we could have the Bloomberg chart up, there have been two instances in the past 2 years where the indices have actually gone down sub 10%, so about 10, 11 odd percent. I think once happened in the month of March this year itself, where we did see a fall of closer to 10 odd percent that happened, and then from there the markets actually moved up about 17 odd percent. And prior to that, in I think 2016, you had another collapse of about closer to 11.5 odd percent, post which that big trend upward move of about 41% came in to the indices. So we're down about 7.5 odd percent. So I mean, whether or not do we see a slight bit of a bounce back from here, or no, don't want to hazard a guess to that.
Yeah.
But the last few times where the markets have dipped 10, 11 more percent, it sort of has seen a slight bit of a reversal coming back in.
Cross fingers is what the bulls would say. But yeah, that's an interesting chart as well. Let's see. Let's not preempt. Just we pointing out what's happened in the past.
It's just an interesting anecdote.
Interesting anecdote. Please do take please take your own calls on whether what can happen. Maybe we'll ask to our technical experts if such a thing is possible or no. However, before we move further with that conversation, and in fact, a couple of very interesting conversations coming up, Amit Tandon as well would join in to talk about the Apollo Tyres and the outcomes there. But first, Canara Bank, that's been in news in recent times. It's planning to raise funds via QIP. It's also filed an insolvency petition against GTL Infrastructure and its arm. Let's get an update with this with Brijesh Mukherjee, is the ED of Canara Bank. Joining us is Shraddha Babla from our research team to take this conversation forward. Shraddha, over to you.
Well, yes, thank you, and good afternoon, Mr. Mukherjee. I understand Canara Bank is seeking to offload unquoted equity shares in about 73 companies. So by when would this be, and how much do you think you'll be able to raise?
Those were all those accounts, the shares of those accounts which were on account of CDR, on account of SDR, all those equities which we had to perforce, invest in. It's a part of debt. So maybe it is those accounts only. So we are not expecting anything very great to come from that.
Okay. Sir, I believe that Canara Bank has some exposure to IIFL subsidiaries. How much would that be?
Yeah, they are standard assets right now. Our exposure would be roughly around 2,500 crores.
Okay. And so these exposures would still be standard on your books, right?
So far, as we are talking today, no default has happened. So let us see what happens in future, then we will see.
Okay.
Of course, we have to make provisions if they become NPA. There is no choice.
All right. So, have banks really curtailed lending to NBFCs given the current liquidity scare and risk-averse environment in the debt markets? Is that something that you've done at your bank?
We have not taken any such decisions as of today. We have not taken any conscious decisions so far as for not funding. It may be because of that, that we have reached that level. But then we have not stopped lending to NBFC.
Okay. So in this environment where yields on benchmark government paper have continued to harden and they've risen in the second quarter even over Q1, do you see scope for a further MCLR hike, at least at Canara Bank?
Yes, we expect some hike in interest rate. Yes, that we cannot rule out in view of what is happening in the money market and this rupee and other things. So we expect some hike to happen. Yes.
Okay. So in the June quarter, you did see cash recoveries of about 3,500 crore from the Bhushan and Electro Steel accounts. If you could just throw some light on what's been happening with resolutions for the list 2 accounts, and now of course you would probably have a better or a fairer idea of the kind of haircuts that you're likely to see on the list 2 accounts.
Okay. So during this quarter, there was nothing which came from the resolution of NCLT accounts of the first list, even SR and other things, even Binani Cement. We were expecting, but it never happened. So this time the recoveries which our bank has made would be basically from the smaller assets, smaller NPA accounts. So there would be a difference naturally between the first Q1 and Q2 with regard to this.
Right. And sir, I also understand that the progress under Sashakt and Samadhan schemes has continued to remain very slow.
No, for Samadhan, our bank had 9 assets out of total, I think, 12 or 13. So we have had a series of meetings, last being on last week of July. And we have given a lot of decisions with regard to those accounts. Some accounts, of course, were earmarked for going into NCLT. So it is like this. It's a mixed sort of decision which our bank has taken, and mostly in line with the other lenders also.
So in the June quarter, you had guided for slippages for the second quarter to remain capped at about 2,000 crores and about 10,000 crores for all of FY19, but that was 2 months back. So hasn't been any change in expectations since then?
Overall, you see, for our guidance for the financial year, we would try to maintain. That is our aim, even now.
All right, Mr. Mukherjee, thank you very much for speaking with Bloomberg Quinn. Neeraj, Devina, two key takeaways. One, of course, they've said that they have an exposure of about 2,500 crores to IIFL, which still stands at standard in their books. And secondly, they've said that the recoveries in Q2 are likely to be lower than what was expected because resolutions in certain big accounts, even in the first list of accounts, hasn't happened. And I'm assuming this will also play out and apply for most of the other banks which had exposure to some of these larger corporate accounts. So not too much optimism probably as we head into Q2, even after the big recovery and resolution linked optimism that we had seen after Q1.
All right, Shraddha, thanks very much for that. So that's a quick chat with the management at Canara Bank. But asset quality is something that will have to be watched carefully. That's the word coming in from Prabodh Agarwal of IIFL. Speaking to us earlier in the day, Agarwal said that he expects margin to remain under pressure for 2 to 3 quarters owing to the high cost of funds. Listen in.
By and large, I feel that the asset quality, the assets that have been created by the NBFC sector over the last 2-3 years have been good. I don't think there has been any excess. Generally, if we are talking about a systemic level, at a systemic level, whichever segment we look at, whether it is home loan, whether it is LAP, whether it is SME, whether it is gold, whether it is commercial vehicle finance, whether it is microfinance, I don't think there are any systemic excesses. That is, people have gone completely overboard at a system level. Because you look at overall system credit growth, the overall system credit growth, the bank credit, the overall system credit growth has been around 13-14%. The retail credit growth, including home loans, has been growing at about 15 to 18%. That is nothing so alarming, right? Now, within that, of course, there will be pockets of problems. So, as I said, I'm not concerned at a systemic level. Okay. Now, there could be certain products or certain entities who could be in trouble, or who could see a significant increase in NPAs. So you mentioned LAP, for example. LAP could be one area where people have, they would have lent excessively, or their LTVs would have been much higher than what they are actually reporting or what they believe it to be true. And of course, the yields are not high to compensate for any loan losses of any significant measure. So that is one segment where you could see some increase in NPAs and increase in losses. Home loan, there could be certain segments, but by and large, I feel that home loan segment has been doing fine. SME, again, similarly, there could be some excesses, but broadly, I'm not too concerned about the asset quality NPAs, and I frankly, I very genuinely believe that we are not going to see a huge increase in NPAs across asset classes.
Okay, so that's of course the management of IIFL talking about some optimism. Well, let's see if it lasts or no. But the stock of Apollo Tyres should also be pulled up on your screen. Remember, it started off about 5.5% lower, has recovered a little bit of lost ground, but again gone down today. It's yet another instance of shareholder activism. Institutional investors have opposed a special resolution seeking to reappoint Neeraj Kanwar as the MD of Apollo Tyres. Kanwar, who's also a promoter, was seeking a third term as the managing director. Remember, I think the company can still seek an approval with lower pay for Neeraj Kanwar, because I think the pay was an issue. But IIAS recommendation was to vote against this, if I'm not wrong. Let's discuss this matter in greater detail with Mr. Amit Tandon of IIAS. Amit, thank you so much for taking the time out. I believe, and please correct me if I'm wrong, that your note was against this appointment.
Yeah, you're absolutely right. We did recommend shareholders vote against the reappointment of Neeraj Kanwar. And as you point out in your opening comments, it's not so much in terms of his continuing as the CEO of the company as much as on account of the remuneration which he's seeking to pay himself.
So, Amit, this is in a manner of speaking unprecedented, right? I mean, have you noticed an instance like this wherein a promoter MD has been asked not to continue in his term because of this issue? And what does this tell you about shareholder activism? Part two of my question would be, what does this leave Apollo Tyres as options with?
Look, you're right. It's one of the first instances, or if not the first instance, where we've seen where investors have given pushback to the controlling shareholder with regard to their ability to run their own company. They're saying, hey, hang on, you might be a significant shareholder. You might be pretty much have been in control of the company, but we don't believe that your continuing here is warranted. In this case, there is a fix which is available, which is compensation, which is the company can go back to shareholders and say that, look, okay, we hear what you're saying and we're going to revise the remuneration. But it is unprecedented, and it's a very clear signal that markets, that the management and the controlling shareholder cannot take investors for granted.
Right. Mr. Tandon, just to get a better sense from you, is there a certain percentage laid out, that is allowable, like the promoter is allowed to take this much salary from the profits earned? Is there any statutory number there, that is the limit that's allowed for a promoter to take out? And is that what Apollo Tyres is exceeding, and that's the problem?
So what the Companies Act says is, the Companies Act says that the total compensation to the all the board we cannot exceed 11%, and that of the executive directors, which could mean the CEO, all the whole-time directors, if they have an executive chairman, cannot exceed 10% of the company's profits. What SEBI did last year when the Kota Committee recommendations came out, they kind of reduced this limit to 5%, and for individual directors capped it at 2.5%, saying that, look, if it exceeds 5% for the family and 2.5% for a CEO who's a part of the family, you need a special resolution for shareholders. Special resolution, as your viewers would know, is you need 75% plus one vote to get an approval. So they have they have on this basis sought a special resolution which got shot down by investors. The only comfort which investors could take at this moment of time is that, the resolution is effective from 28th May 2019. And therefore, the company has about 6-7 months to fix the issue, which is going back to investors. But clearly, investors have had their voice heard on this.
It's interesting. Omkar and Neeraj Kanwar's salary to the PAT on a year-on-year basis in FY18 itself is about 12.1%. So that is a concern, right? Because you said that number has been brought down to 5% for the family.
Absolutely. But it's effective from, I think, 1st April 2019. So it's not that they cannot pay. They can pay a high number provided shareholders agree to it.
Amit, one final question from mine at least. What would your advice be with the new resolution, and what levels would you be comfortable? I'm just trying to get a sense that is IIS comfortable with these guys continuing in their term if they come back with a proposed lower salary, and what would that number be which would prompt you to advise shareholders to vote in favor as opposed to voting against?
See, that's, it's a very difficult question you've asked me. Are we okay with Neeraj Kanwar continuing? I don't think that is something which we've kind of questioned. Our concern has been the increase in salary, which has kind of not kept pace with the company's performance. So in 2014, for instance, Neeraj Kanwar got paid about 14 crores, and it's kind of steadily moved up to 44 crores in 2018. In 2017, he got paid about 30 crores. So between 2017 and 18, his salary has gone up by about 50%. What was proposed was, again, a large component of it was linked to the company's performance, but based on what was there in the past, the number would have been closer to about 60 crores. So those are fairly large numbers you're talking about. Our view is that, look, it's very difficult to put an absolute number, but what we say is there are two guiding principles which should be there. One is the fact that it should be in line with performance. Having said so, there also need to be absolute caps, which, if you say that, look, I'm going to take 5% of profits, 5% of profits based on the Reuters consensus estimate next year will be 50 crores. So you need to say that, okay, there is going to be an absolute cap. Now that the board can decide based on how valuable a person is, what the industry benchmarks are, and so on and so forth. It could be any number which they choose, but we do expect there to be some caps, and I would say reasonable cap which is there, so that investors have a clear understanding in terms of what is being paid. The other thing is that, look, we need to remember for, particularly in this case, but also true for others, that the wealth for a lot of people is tied up in the shareholding. And therefore, what you kind of take by way of salary and commission, etc., should matter less. And if it's going to matter less, then why not do what we believe is the right thing, being more even-handed in terms of what the salary which is being paid. In this instance, it works out to about 950 times the median salary, which is high by any stretch of any kind of benchmarks which you choose. So they have to look at what the salaries in the industry are, what the larger companies are getting paid, what the increase is, what the median pay is, and then arrive at a number.
Right. So it's a 77% increment, from FY17 to FY18 in terms of, salaries of Omkar and Neeraj Kanwar. Is there a concern that the additional, astronomical increase in salaries, a portion of it could have actually been plowed back into the company to improve the growth prospects of the company, and instead it's gone back into the pockets of, the promoters. So is that something that bothers shareholders?
Well, at some stage, I'm sure it will bother shareholders. That you're talking, one is you're talking about large percentages, and you're talking about large numbers in absolute amounts. It is something which should bother shareholders, and I guess at one level, the vote is a reflection of the fact that it is bothering shareholders. So, if you kind of look at the vote, the fact is that, one could argue out that it got carried by given the fact that about 72% of the aggregate shareholders voted for the resolution, but the other is if you kind of exclude the promoters and then look at those who were present and voting, it was 56% of those shareholders voted against the compensation. So it is a very strong signal which investors are sending that rein in your rewards.
Got that. Mr. Tandon, thanks very much for joining us. Really appreciate you taking out the time and highlighting those factors for us. So Apollo Tyres, the stock though was down about 5.5% in early morning trade, recovering from there, but still down about 3%, 214 on the stock. It's not been a very great, smooth journey for this one, at least.
Not indeed, and correcting in today's session as well. What else, by the way, just before we get in our experts, and I think it'll be important to talk to them about how are they viewing trade currently, because it's a bit of an iffy market. The Nifty Bank, while was looking very wobbly just about 15 minutes ago, it's just recovered a little bit. The Nifty 50 about 0.5%, which is just day one of the new series, and the mid caps and the small caps in particular are being taken to the cleaners currently. A lot of these stocks have sold off quite vehemently, to be honest. Anyone at 52-week high? No, hardly anything. United Breweries was, but even that one is down about 2.5%. So a lot of stocks under a fair bit of pressure in the session today. Even on the Nifty, by the way, we were talking about this. It's not just Yes Bank or financials. The auto companies are really taking it on the chin. Eicher Motors, and look at the performance of this stock. I mean, just pull up the YTD chart of Eicher Motors and you will see what I'm talking about. Sub 24,000 for Eicher Motors. And this year, look at that fall off the cliff of sorts for Eicher Motors in this last 15 or 20 odd sessions. It's fallen down from almost 28,000 or thereabouts. 1 month, about 16% down, and this is not the peak. The stock was northwards of 30,000 at a point of time, and this is the high quality name. Royal Enfield bikes are still selling, but the market is not distinguishing that. Hero MotoCorp is down 5.5% today, 2915, and correcting 2. So that one has under a lot of pressure. And Bajaj Auto, 2694, down another 3%. Mahindra and Mahindra, 2.5%. Not to even talk about the TVS Motors and their Escorts, the non-Nifty names, under pressure today, or over the last few days.
Yeah, you know, if you look at the BSE Auto Index as well, on a year-on-year basis, the Auto Index is down about 10% and if you look at the kind of individual contributors, and if you pull up the MRR function and the kind of losses that most of them have seen, Motherson Sumi has been down 33% on a YTD basis. Tata Motors has knocked off 50% since January. Hero MotoCorp is down 23%. Maruti Suzuki is down 24%. And these, like you mentioned, these are all like high quality names. Eicher Motors 20%, Bajaj Auto 18%. And you know, from the peripheral, you know, allied space, Balkrishna Industry is down 14% and Bharat Forge is down 18%. Let's talk a little bit more in terms of the market mood right now. Anand Tandon, he's joining us on the show right now. Anand, thanks very much for taking out the time. What are you advising clients to do right now in terms of taking fresh positions or probably just sitting on the fence for a while?
Well, sitting on the fence can be very painful. And taking fresh positions right now is not something that I would advise anyone. So the best thing to do is that if you have still got any more mid-caps left, clear it out if you haven't already done it. And wait for this whole thing to stop falling. I don't think we are done quite yet.
Anand, what leads to that? I mean, because right now, I think the last 300, 400 on the Nifty or whatever, 500, 600 on the Nifty bank have been our own doing. It's not that the global factors have really impacted this much. Do you see the pain because of the pain in the credit system impacting our levels more? I mean, what I'm trying to get is that is it India specific and factors that are leading to this selling, and therefore how much more downside do you see to our markets? Could it be the tune of northwards of another 7-8% from these levels?
First of all, I don't think it makes sense to try and predict either an upside or a downside, right? You just go with the market. The reality is that there is, because of the kind of credit issues that we are having right now, there is more than a high probability that it will impact the real economy as well. If you actually find that, you know, for example, mutual funds are not willing to give more money to NBFCs and consequently NBFCs are not able to roll over the CPs, essentially that will mean that their ability to lend money goes away. And given that most of the growth in the economy has been consumption, and that too led by lending, if you find that lending becomes a bit of an issue, obviously you will find that that will impact and spread over to all other, for example, consumer durables, auto sector and so on. So what you are seeing, for example, in terms of two-wheelers, to my mind, is the market taking cognizance of the fact that that is also likely to see a kind of squeeze in terms of the sales. When you couple that with all the other activities of the government in terms of increasing import duty, perhaps of the RBI looking at a rate increase, and of course the cost pressures that will build up as a consequence of that, you have a tight squeeze. On the one hand, costs are going up. On the other hand, the cost of ownership is going up because of the interest rates. And on the other hand, the availability of credit itself may be a problem. So therefore, we are not in a position that you can actually take the current expectations of growth anyway seriously. And with the banking sector itself going to now come under some amount of pressure, you will find that, you know, the entire assumptions of growth in the economy are going to go for a toss. So I think, you know, we have to wait for this whole cycle to stop somewhere before you can take a considered view of where it goes.
Anand, you know, in the morning, Anirudh spoke about a piece regarding the divergence of the move on the index versus the mid caps and the small caps. That's been the most since 2004.
Yeah, I mean, the terminal only gives us data from 2000 calendar year 04, maybe even before that, but that data I don't quite have.
Yeah, so the divergence is pretty strong in terms of the index movers and the mid-cap space. So do you see the pain actually, do you see this gap widening? Because, you know, the index movers, a handful of, 9 or 10 stocks have been the bigger contributors on the index, while the broader market pain is pretty predominant all across.
Well, that always happens, isn't it? So my simple model is this. Whenever there is a liquidity excess, the money goes into mid-cap companies because that's where investors think they can get the highest delta. And when money is tight and there is a liquidity issue, then the greatest fall will happen in the mid-caps again because the buyers just go away. And therefore, even a small amount of selling can actually be accomplished only at a much lower price. So essentially, it just gets exacerbated on both sides, even on the way up and on the way down. We've come out, except the last 12 months, let's say, you've come into a period where you've had huge outperformance on the mid-cap for the last 3 or 4 years. But what we are seeing is an unwind of that. I don't think it reflects either in terms of the earning potential or the quality of most companies. Of course, there are several which are of dubious nature, but by and large, the companies that are falling are now not distinguishing between companies which are great, good, or just plain bad. It is simply a question that there are no buyers who are willing to buy at the current price, and therefore to sell even a small quantity, it will have to go down. So till that credit or the liquidity issue in the market is not resolved, I don't see that there is going to be any major recovery in terms of the mid-cap. More importantly, after this kind of confidence-breaking move, finding fresh buyers even when it stops is going to be a little extended in terms of the time frame. So therefore, if you are looking at buying mid caps right now, first of all, I would recommend wait for it to stop falling. And then secondly, even if you have to buy, don't be in a hurry to necessarily buy the first pop. You will get enough time, at least maybe over the next 6 months to a year, before any of these companies start to show significant upside.
True. Well, I really want to talk to Anand Tandon about some specific spaces as well, but it's also time to get in our technical expert on board. Anand, just hang on for a moment. Lots more to talk about, but let's get in Brijesh Singh of StockAxis with his thoughts on the current trading pattern as we speak. Brijesh, good having you. Thanks so much for joining in. How are you approaching trade today, Brijesh? Are you at these levels initiating any trades on the Nifty or the Nifty Bank? Let's start off with those first. I don't think Brijesh can hear us. Brijesh, can you hear me? Just a luck. Okay, I don't think Brijesh can hear us. Sarvendra Srivastava, though, I'm told is with us as well. Sarvendra, good afternoon. Thanks so much for joining in. If you can hear me, a plain and simple question, Sarvendra, for a lot of viewers who might be wanting to know right now what to do. Are you comfortable initiating a fresh trade on the Nifty or the Nifty Bank at these current levels? 25,000 on the Nifty Bank on the spot, 10,900 on the Nifty 50.
Yeah, very good afternoon, Neeraj. Yeah, absolutely. I think I would be comfortable initiating trades, and the only bad news I have that the trade is on the sell side. I think the market still has not formed a bottom, and eventually 10,866 will break. So I would say that 10,750, 10,700 would be the target going on for the Nifty from here. So anybody wanting to have fresh trades, I think they are on the sell side, and you would be shorting, looking for a target close to 10,700, 10,750 on the Nifty spot, and keeping a stop loss at 11,036.60 on the spot prices, and afraid that the trades are all on the sell side, and the market could actually sell off even more sharply than what we did last month.
10,866, that's the level that the Nifty reached. That was the lowest point that the Nifty reached last Friday, after which the Nifty's not managed to breach that level on the downside. So once it breaches that level, Sarvendra is saying the pain could be even more. And right now at 10,900. Brijesh Singh is also here with us. Brijesh, what are you doing on the index right now?
Good afternoon, everyone. Definitely, no doubt on the shorter term time frame of the chart as well as on the longer term time frame of the chart. The pattern which have formed is the lower highs formation. If we take about the Nifty swing low, the previous swing low was 10,557. That was made on the June 28th. From there was a one-way rally to the level of 11,760. That was the all-time high. That was made on 28th of August. So if we draw a Fibonacci retracement, so somewhere around 78.6, somewhere Fibonacci retracement value comes around 10,800. So I'm keenly watching this 10,800 zone to not be get broken. Anything below it, if it comes, then definitely 10,550 or say 10,557, that is a swing low, would be acting as a support. As per the upside is been concerned, I am not looking Nifty right now crossing 11,150 or say 11,200 juncture. Right now Nifty has been quoting at 11,900. So as a part, sell and rise has been advises, but are not at this level. Anything suppose 11,000 comes up, then definitely 11,150. Keeping that thing as a stop loss, one can go for a sell side for the target of 10,800 or below that.
Looking ominous, yes indeed. For stock trades, Brijesh, I'll come to you first. Your stock recommendations for the afternoon.
See, I'll go with the auto two-wheeler counter. First is Hero Motorcorps. In today's session, it has made a new 50-week low. The previous 50-week low somewhere around 3,033 juncture. Today, it has broken that thing with increase in volumes. Right now, the stock has been quoting somewhere around 29.10 to 29.15 juncture around. So one can go for a sell side with the stop loss of say 29.70. For the target of 2,800. This I'm looking within a week time frame, the target achieving, because the increase in volume indicates that we might try to the target might be achieved within a week time frame. Second counter would be CSES. Low highs formation on the weekly charts with the trend line breakdown below that, increase in volume, all these things indicates the negativity for the chart. So 825 has been quoting. So at the present rate or somewhere around 8 for a sell side, with the stop loss of 880 and look for the target of 750, and it can even try to touch 660 juncture in a month of time frame. So the chart has a more pain on a downside rather than on upside.
Sarvendra, what about you? Your stock recommendations?
I have a solitary buy which is from the OMC space, where we believe that we are grossly oversold and there could be a case for a bounce. So the only trade that I have on the buy side is HPCL, buy for a target of around 270, keeping a stop loss at 244.40 on an hourly closing basis. And the remaining two trades are on the sell side. First one being from the pharma space, Biocon, I think is now clearly inverting, and what I can see a clearly loss of momentum as well. So this is one stock which is probably outperformed, not fallen. So time to correct. Look for a target around 660 on the downside on the spot prices. Keeping a stop loss at 706.60 on an hourly closing basis. And the last one is a sell from the metal space, JSW Steel, where I believe, along with the metal pack, this one has also started to now fall, and the fall could get accelerated on the downside. Look for a target around 360 on the downside on JSW Steel, keeping a stop loss at 391.60.
Okay, got that. Anand, what are you doing within the metal space? I mean, the last few days that pocket saw some amount of interest in a falling market, but today looks like they're being punished too. So the likes of Hindalco or Tata Steel, or JSPL, these are the kind of names that have seen heavy cuts.
Well, obviously when the market falls like this, almost everything will fall with it. Within that space, probably in the domestic market at least, steel will do reasonably well compared to at least the rest of the sectors. And for this year at least, I don't see them showing any major stress. Hindalco too should do reasonably well given what we've seen in terms of prices. So the space is probably one of the more attractive ones in a otherwise rupee market. Certainly the one area that you don't want to be touching is consumer durables, so you don't want to be touching anything to do with consumption, and therefore things which will benefit either from the import tariff hikes or the rupee fall are the ones that you are really looking to get into, if at all.
All right. Just pull up the India VIX. We're trading at about 17 or so right now on the India VIX. But it's interesting to see from the time that we did started to dip on the index, the India VIX is actually up from 12.42 to about 17.23. That's almost a 42% increase in the volatility that we're seeing right from the time that the Nifty started to take that turnaround from the highs.
Yeah, well, it's looking ominous for a bunch of these spaces as well. Anand, what's also happening is that, it's not just necessarily the large caps which are expensive which are falling. A lot of other names have fallen. So autos, I think, because of the rate sensitive nature, are being taken out. Now, whether what's adding fuel to fire is news reports about certain companies giving discounts, so on and so forth, but it's not just Maruti. Hero MotoCorp is down 6%, Eicher is down significantly, and Eicher and Hero, well, their numbers haven't been bad thus far, so the market is not kind of quite distinguishing, and large cap auto names also are being taken out. Is there more pain into the rate sensitive pack, which is non-banking and non-financial, which is autos, and I'm not really clubbing real estate out here. You don't quite know what will happen there.
Well, certainly, as I just pointed out, if you find that there is a slowdown in terms of the credit growth that we have seen so far on the consumption sector, that will certainly impact negatively the demand in terms of any of these sectors that you just mentioned. And auto is obviously one of the leading sectors that will take a hit in that. I think the market is actually making a distinction. If you see, for example, Ashok Leyland has not fallen off as much, where the assumption is that you will continue to get some reasonable growth on the basis that the trade is not coming down very rapidly, at least not yet. On the other hand, direct consumer-facing items like the two-wheelers and even the four-wheelers like Maruti are going to face the brunt of it. And even within that, if you see, for example, there is a case to be made that Eicher perhaps is going to slow down very significantly. Nothing to do with the rate sensitives, simply the fact that they have now reached a size where it's no more a product where there is a waiting list. In fact, there is now an inventory build-up that's happening in Eicher. So even without this, there was a case to be made for Eicher to be derated. So I think there are, what you're seeing is a combination of the fact that the market had actually gone hugely overpriced on many of these companies on the basis that growth will be in perpetuity, and a reversion to mean on that, as well as the fact that the growth may actually not be even as much as anticipated on the overall market, is what is going to kind of make this cycle downwards even steeper, and that is what we are seeing right now.
Pull up an Apollo Tyres. We just, got a sense of what the issue is with regards to the reappointment of the MD of the company. 212 now. That's once again taken a U-turn. Was up, down about 3.5. So now the pain is a bit more. Volumes are at 6.3 million. Anand, did you track this space and in particular Apollo Tyres?
Well, only to the extent that obviously on a fundamental basis, it was one of the more attractive stocks. And again, we were having, we did see a situation where anti-dumping duty and so on gave it a flip of life. And the fact that the kind of growth that has been seen in the consumption industries for the tires has actually been very robust. But obviously Apollo suffers from a different problem right now.
Okay. On the charts, Brijesh for Apollo Tyres at 212.
See, 219, 220 is a resistance zone. So till the stock has been trading below this, I'm looking stock breaking 200 and trying to touch 195 to 200 odd levels. So, this indicates the sell side rather than on the buy side.
Yeah, well, Apollo Tyres too, and as we said, the volumes out there are fairly high. Anand, is there the market is also worried about what will happen to some of these names which have a higher LAP exposure, and a lot of people that we talk about if there is a combination of a higher exposure to LAP plus the ALM mismatch coming up in the next 6 months, then that is a very potent combination for significant downsides. Now, are you in that camp, and therefore are there names which have fallen a lot already but you would believe would best be left untouched for the time being in the NBFC space?
So frankly, in the NBFC space, unless it has got a very strong liability franchise, I think you should stay away from it for now. Unless RBI, for example, decides to extend a line of credit to the NBFCs directly. There is a fear right now that the rollovers may not happen of CPs and so on. So while the companies may come back and say that, their liquidity is very nice and they have almost 80% bank loans, etc., the point is that the margin is what matters. So if you're not able to roll over your CPs, you're not able to expand your balance sheet, all of it will come back and bite in terms of the growth. I mean, you cannot have companies trading at 4 times to 7 times book value and assume that there is going to be a degrowth in the book. It has to assume that there will be a very rapid increase in the book and therefore the earnings. Now, that is the assumption that is being questioned right now, that at best, assuming no great defaults, all that you will end up doing is that the growth cycle would have slowed down very dramatically, and therefore, if nothing else, the valuations have to correct to reflect that. The more problematic area would be if you find that there is a liquidity tightness, which makes even if they are solvent, it makes them unable to pay off their liabilities, etc. So, which is why I said that if you have to buy something, you have to look at those which have a very strong liability franchise and a diversified liability franchise. And there are unfortunately not too many NBFCs. So, if you have to be in the space, better to stick with the frontline banks.
Infibeam is now down 68%. Stock's trading at 63 rupees. And what a day for the stock. Volumes has surged to 128 million from a 20-day average of 7 million shares. Edelweiss is down 1%. Motilal Oswal is down another 2.5%. That's the volume function there of Infibeam. Edelweiss is at the lowest point of the day, 187. Motilal Oswal too, now down at the lowest point of the day. Sarvendra, on the charts for an Edelweiss or a Motilal Oswal, are you tracking these two?
Yeah, I think looking at what the market has in store, I think financials and especially broking stocks should remain weak and will remain weak because there's a clear clash of business here, and with the way markets now tanking, especially mid caps, I think a lot of I think the overall business would get stuck in the sense that clients would have positions, and till you are not in a profit, the churn stops. So I think that is where the stock has already suffered from 300 plus to around 180. My sense is that there is still little room on the downside. 150, 155 is what the stock will slip towards. It might take a month, 3 months, but I think 150, 155 is coming for Edelweiss.
It's looking slightly ominous for NBFCs, and as Anand said, maybe get out of stay away from NBFCs which don't have a good liability franchise. Anand, last question before I thank you. What about some of the larger NBFCs and maybe some insurance plays? So what do you do with, say, a Bajaj Finance or an HDFC Life? It's not strictly an NBFC, but within that pocket, or maybe one of the AMC names. What would you do here?
Well, the insurance place is an interesting place. One, because it is probably it is not a leverage play. However, it is leveraged to the market in a different sense because unfortunately 50% of the insurance that is sold is in the form of ULIPs. So for all practical purposes, they are like mutual funds. And obviously that is going to take a hit on the basis that you have to assume that the kind of inflows that you've seen into the markets will obviously not just slow down, perhaps even reverse. ULIPs are not likely to reverse, but at least the growth will come down. And I think you're seeing that across the board, that reality being shown across the board in all AMC as well as insurance companies which we have as listed. However, I think that's perhaps one of the most attractive places to look at because there is no fear of leverage. There is no major problem in terms of the market. And if there is something that will change over a period of time as soon as this fear is out, is that you'll probably go back into a growth phase, at least in those areas. So you're probably getting a chance, if you're a 3-4 year investor, to find these stocks at much more attractive value. I mean, an SBI Life, for example, is now trading at less than 2 times EV. Their embedded value, which is like, for a giant like SBI Life, that's one of the cheapest valuations that we've seen ever so far. Likely it will get cheaper a little bit more, but it can be great value if you look at it from a 3-4 year point of view. So AMCs and life insurance companies would be my favored bet if you are a 3 years or 4 years view.
Bajaj Finance, I presume.
Bajaj Finance, of course, has a direct problem with their NBFC because they are an NBFC, and their problem remains that the valuations are very, very stretched. they are not likely to see any problems in terms of their liquidity and so on. So they'll probably gather momentum in terms of being able to take larger part of the market share. But at this price, I still find that they are somewhat expensive given the whatever is happening in the rest of the markets.
Anand, really appreciate you taking the time out and talking to us today. Boy, we needed some good opinion. Thanks so much for that. Okay, request our technical experts Sarvendra, Srivastava and Brijesh Singh to stay on because there's lots more to talk about. But since we're on the topic of NBFCs as we head into the break, hear out IIFL. We made you hear a small slice, but hear out a slightly larger slice of the conversations wherein Prabodh Agarwal specifically talks about how problematic, if at all, could the problem of could an NPA issue be for the NBFC space at large and for IIFL.
By and large, I feel that the asset quality, the assets that have been created by the NBFC sector over the last 2-3 years have been good. I don't think there has been any excess. Generally, if we are talking about a systemic level, at a systemic level, whichever segment we look at, whether it is home loan, whether it is LAP, whether it is SME, whether it is gold, whether it is commercial vehicle finance, whether it is microfinance, I don't think there are any systemic excesses. That is, people have gone completely overboard at a system level. Because you look at overall system credit growth, the overall system credit growth, the bank credit, the overall system credit growth has been around 13-14%. The retail credit growth, including home loans, has been growing at about 15 to 18%. That is nothing so alarming, right? Now, within that, of course, there will be pockets of problems. So, as I said, I'm not concerned at a systemic level. Okay. Now, there could be certain products or certain entities who could be in trouble, or who could see a significant increase in NPAs. So you mentioned LAP, for example. LAP could be one area where people have, they would have lent excessively, or their LTVs would have been much higher than what they are actually reporting or what they believe it to be true. And of course, the yields are not high to compensate for any loan losses of any significant measure. So that is one segment where you could see some increase in NPAs and increase in losses. Home loan, there could be certain segments, but by and large, I feel that home loan segment has been doing fine. SME, again, similarly, there could be some excesses, but broadly, I'm not too concerned about the asset quality NPAs, and I frankly, I very genuinely believe that we are not going to see a huge increase in NPAs across asset classes.
Okay. Just a couple of those points, and you have some exposure to some of these as well. I mean, your growth in microfinance, SME, etc. was doing very well. I'll come to that, but LAP predominantly. How high a percentage is it for you? And do you fear that there could be some NPAs? It's not predictable, but is there a possibility of some NPAs for you as well?
Yeah, so currently for us, LAP is about 17% of our total book. Our total book is 33,500 crores, 17% is LAP. We have not been growing LAP for the last 5 quarters.
Interesting.
So you will see last 5 quarters, the growth has been about 3 or 4%.
Was it a conscious decision?
That was a conscious decision. We have been saying that. The reason why we have not been growing that is because we didn't find the segment attractive enough. The yields had compressed to about 10.5% level. And at that level, we didn't find it attractive enough given the, the high OPEX and the high possibility of a credit loss. So that segment we had consciously stayed away from. And that has been coming down. In that segment, therefore, there could be some rise in NPAs, but I really don't see, because we have been stayed out of that segment.
Okay. Could it be a problem? I don't want to get into names, Prabodh, but you have a great hold on the industry as well. Could there be an issue on the LAP book for some of the NBFCs? Again, not wanting to get into names, but do you see indiscriminate lending in that pocket for some quarters of the industry which might face a problem? I'm just trying to get a sense of what the risk could be for the system at large.
Yeah, so there is possibility that, that is there. But although, LAP is very difficult to generalize, because LAP, we talk in homogeneous terms, but actually LAP is not so homogeneous, because it is a SME lending and the industry, the end user industry may vary. So, one is that, you may be lending to a trader, a wholesaler, a shopkeeper, or you may be lending to, an industry. And then within that, it could be several industries. So depending upon what is the end user of the industry, it could vary. So therefore, very difficult to generalize that, that will happen. Then the type of collateral also varies. Of course, it could be residential, self-acquired, it could be commercial. And then LTVs, of course, people have been liberal with LTVs. So we of course, 6 months back, we used to hear cases where the LTVs used to be 75%. And on top of that, people used to give unsecured loans, so making it 100% LTV. So obviously, those people will have issues. So by and large, yes, I would think that there could be some issues with the segment.
Okay, your microfinance book grew very admirably. I think the last quarter numbers as well, even though the base may be low, but the growth number were high. Maybe because the base is low, the growth numbers were high. Would that taper off? Would that see some issues? I mean, it's a very small pie, so may not really impact IIFL too much. But would you consciously taper the growth off there?
So right now, actually, we are very comfortable with our MFI book, and we are still growing it. So currently the book size is crossed 1100 crores. It's about 4% of our total loan book, and we actually have increased our presence in some of the eastern states where the credit culture we find is much better. States like Odisha, Bihar, UP, Jharkhand, Bengal. Those are the states actually where we have presence. Of course, traditionally we have had presence in Tamil Nadu, Karnataka, Maharashtra, but then these are the eastern states also we have added. So we find that there is enough growth opportunity. So I think, of course, we'll look at the liquidity, but from a asset point of view and the yield and the overall spread and the credit quality, we are still very comfortable.
Interesting. Two worst case scenarios for IIFL now, or based on the way you see things right now, two numbers and how bad can they get if you can predict them, that is. One is the NPS, if at all. The other is the net interest margins, which seems to be a common factor that NIMs for almost all NBFCs might come under pressure because of the ALM mismatch that some of them might have. Where are you on both of these?
Yeah, so I was expecting that question on NIM. So NIM is something which is, of course, very logical to expect that there would be some pressure on the NIMs. So I would also say that there will be some pressure on the NIMs for the next 2-3 quarters. That is because the cost of funds have gone up very sharply. And while we are sort of passing on this rate, but still it would be a bit gradual. So therefore, there will be some pressure on the margins. But having said that, it would vary again from product to product. There are certain products which are high yielding and where we are, the borrower is less sensitive to interest rates, for example, gold or SME or microfinance, where the passing on would be much quicker. There are other segments where it is much more gradual because of the entire industry structure, because banks are present and because, for example, home loan and LAP, where the passing on is more gradual. Even commercial vehicle to that extent, where it is gradual, where you could see some margin pressure, and the others there could be quick. But overall, I would think that yes, margins should remain muted or should be slightly under pressure for the next 2 quarters. But again, way that we are pricing is that if one were to look at a 1-year horizon, then margins should revert back to where they are.
Interesting. NPAs, the worst case scenario, as you see it right now?
Yeah, so NPAs could go up in certain segments as we discussed, whether it is LAP or real estate or, some of these segments, we could see NPAs going up, maybe some in commercial vehicle. So there will be some pockets. Right now, we do not have a clear visibility as to which segment, where it will go up. It's a bit too early to say that. Maybe it will go up in December quarter or March quarter, not immediately. But yes, that is something we'll have to watch carefully.
Good news, guys. Got a promotion and a damn good raise.
Congrats, beta.
Congrats, मेरी तरफ से भी.
From mama too.
वाह, raise? अब तो इंश्योरेंस पॉलिसी ले ले.
इंश्योरेंस? कौन सी कंपनी से लूं?
सोचना क्या? चूज वही जिस पर हो पूरा भरोसा.
वीरू, go for convenience. My company is online, quick and simple.
बेटा, but पॉलिसी समझाएगा कौन?
वेबसाइट पे सब है पापा. I can even call and ask.
क्लेम सेटलमेंट का रेशो क्या है? मेरी कंपनी का 98% से ज्यादा है.
That's good, but आज की generation wants everything online. Easy premium payment options, loan facilities और wide range of products.
अरे पापा दीदी, I will decide. Just send your links now. तुम दोनों भी ना. Same choice. LIC.
LIC trending with times. 62 सालों से हर generation की पसंद.
When I started juicing to bounce back from a serious injury, I had no idea that it would turn into a passion, that would turn into a brand that provides healthy choices to millions of consumers. Today, my brand is a household name. I am Anuj Rakyan, and my story is a clean and a flavorful one. I'm the raw pressery guy, and I'm here to tell you my story only on Aegon's of Business.
Aegon's of Business never stop. Only on Bloomberg Quint.
Well, back with countdown right here on Bloomberg Quint. 24 or 25 minutes left for the markets to shut shop. And I think the bulls will be hoping that the 25 minutes comes sooner, because they're now down about 0.75% on the Nifty, sub 10,900 trading at the lowest point of the day. For the Nifty Bank as well, around the lowest point. The Nifty, 81 points down. That's a fairly large gash that we have. And by the way, it's not just the Nifty. I mean, look at the pain point in the Nifty 500, and that's the key thing. If I can just get the top 10 losers, the MRR function on the Bloomberg terminal on this screen right now, and you will see what I'm talking about. It's down about 1.28%, but look at the cuts at the bottom of your screen. If the camera can zoom in there, Infibeam is down 69, but look at the others. Eros is down about 19%, Gen Irrigation 16%, Lakshmi Vilas Bank 15%, Welspun Corp is down about 14.5%, Jayaprakash Associates 12%, KPIT about 12%, ITDC 11%, Jindal Stainless 11%, and a clutch of other names which are down double digits as well. Gati is down about 10%, for example. Praj is down 10%. So the pain at the broader end of the spectrum is only increasing, and some of these names are largely very stable names with fairly positive management commentary over the last few days about the business. But right now, frankly, I know Anand Tandon said the market is distinguishing, but really a lot of these stocks being taken to the cleaners, and not all of them are very expensive on the valuation front.
Neeraj, you know, to go back to a point where everyone said that the India fundamentals and India internal story is so strong, and that's why we were outperforming up until now, which brings you to the point that now our internals are starting to fail us. You are seeing cracks in the structure of the markets itself. And add to that, if the global equity markets start to crack. So up until now, and like we discussed yesterday, and what Harvard Marks said, that S&P 500 has not had a single period of a 20% crack coming yet. And 10 years to that. So it could, he's not predicting a crash, but it looks ripe and frothy, you know, for a possible correction. So if that were to happen, what happens then to our markets, which are anyway so structurally weak at this point? Does the backbone break? Does the back of the camel break further from here? Or, you know, what do we see? Because, I mean, the outward pressure is still not coming.
Yeah, for the last straw on the camel's back, maybe. Let's hope it doesn't happen while we are getting roiled internally any which ways. Infibeam, by the way, as we speak, is down 70%. So yeah, it is making a fair point. For now, the world markets are okay, and we have our own problems. What if the world markets start coming off as well? Looking weak right now. Let's get in one more voice. Avinash Gorakshakar of Joindre Capital with us. Brijesh and Sarvendra are already with us. We'll just get to them in a bit. But Avinash, you know, the pain points in some of the Nifty 50 names which aren't quite impacted by what's happening. L&T is down 3.5%, Bharti Airtel is down 5.5%. These are not technically rate sensitives, but coming off. What explains these pressure points, and do you expect these to last for some of the other names? Because we've discussed NBFCs, we've discussed banks, rate sensitives. What about the others?
No, I think it seems clearly the market is low on confidence, because I think clearly our sense is that whatever bounce comes in the markets, Neeraj, would obviously come in once the Q2 earnings seasons actually come off. Most of the analysts, including us, we are expecting that Q2 numbers should be pretty decent compared to the Q1. And as of now, I think it's a question of what kind of liquidity impact the IIFL saga would obviously have on the markets. I think today RBI is having a meeting with most of the key shareholders. So I think clearly some commentary on that front would be very important, because clearly liquidity constraints and more importantly impending rate hike or possibly in the RBI policy is also something which is now concerning the market. So overall, I think till the time the RBI policy doesn't go through and we don't get the first set of Q2 numbers, you're going to see these kind of falls, and I think the falls have been quite dramatic. I think you mentioned about InfiBeam. I think clearly a month back the stock was about 250 odd rupees, and today it's in double digits. So I think clearly the fall has been very disastrous, and I think these kind of 50-60% falls have now become quite normal. So I think one has to be very careful. And overall, I think it's going to be only the Q2 numbers now which is going to give some relief. Hopefully, the October series should be much better than the September expiry.
Two stocks, L&T and Emphasis. If we could have both these stocks up on the screen. Both these stocks, have a buyback in them, and they're significantly below their buyback price. L&T's buyback price comes in at 1,500. Emphasis buyback price is at 1,350. Avinash, is there a good short-term play here? Just play by the buyback. You're not going to catch falling 9.
Normally, Devina, when the record date for the buyback is announced, you see a bounce back in stocks in companies where buybacks have been announced. And I think L&T buyback is definitely quite attractive at around 1,500 odd rupees. So I would believe that as long as the buyback is a feasible proposition and the acceptance ratio is also pretty good, I think definitely there could be an arbitrage opportunity there. So I think compared to Emphasis, I would believe that even L&T at the current odd levels definitely looks attractive. I think in the morning it was about 1,300 odd plus rupees, and I think purely on the sentiment factor, this stock has been beaten down. I think if you see the Q2 numbers, Q1 numbers, and the kind of management commentary the management has given, our sense is that you are going to see a stronger pickup in the capital goods sector, and L&T definitely is one of those frontline companies which is going to benefit.
Some stocks on the charts as well. Sarvendra, a difficult one, but let me ask you nevertheless. If some client is asking you for an advice on how to trade Yes Bank, what would you say? What would you recommend? Okay, I don't think I can hear Sarvendra. Sarvendra, stay on. We'll just try and repatch that audio. Brijesh, the same question to you. If the client is asking you how to trade a Yes Bank, what would you say right now?
Last time, Neeraj, when we have spoken about the Yes Bank, I said that 180 is a crucial level. It should not be get broken. And anyhow, after making today low of 165, the stock had bounced back. If it is looking for purely for a trading sort of thing, then definitely the swing low of today, 165, one can keep that thing as a stop loss and look out for the target of 200 or 205 zone. Investment point of view, still more downside is been left because 180 has been broken, and if it's been trading near that level of 180, if it gives closing below that, then we might try to dip more, say downside. I'm looking the next support lies at 125 to 130 zone, followed by 150. So these are the two levels on the downside. If it comes, then definitely one can go for a buy side.
That's Yes Bank there at 185. Let's quickly just pull up some queries that we're getting on YouTube and ask our experts on whether they can help out with them. ONGC and ITC, Avinash?
I think clearly ONGC gains with every increase in the crude oil price, Devina. I think I would believe that, compared to oil marketing companies, upstream companies like ONGC, Oil India would definitely be better bets. The only impending factor is the follow-on public offer, which I don't think in the current scenario is going to happen. But overall, I think ONGC definitely looks to be all set to present a better set of numbers compared to the pure oil marketing companies, where we could see a double whammy, both on the crude oil price front as well as on the currency factor.
Okay. Does any one of you have a view on Lakshmi Vilas Bank, Sarvendra?
I'm afraid I'll have to pass that one. I don't track that one.
Okay. Brijesh, what about you?
See, even I don't track, but purely from a chart point of view, you can say that the previous swing low was somewhere around 89. Today, it has broken with increase in volume. Now, the recent level of support lies somewhere around 60, 63. So, immediate support would be 63, from where we can see a bounce back, but 89 would be acting tough as a resistance.
Bit of a bounce, if you can call it that. The Nifty Bank is up about 100 points. So, well, volatility for sure. The Nifty 52 has moved up from the lows of the day. Pull up India VIX too. Just want to see what India VIX levels are right now, and then the market breadth as well as the turnover ratio, turnover number should come up on your screen. India VIX marginally higher, market breadth firmly in favor of the declines, and the turnover on the day one of the new series, which wasn't the greatest really at about noon, but for day one, both the F&O volumes and the cash market volumes reasonably high. For the first day of the new series. Cash market volumes, of course, have no connection to the day one otherwise, but the F&O volumes too, 6.74, we probably closed at around 7 lakh crores. It's probably not all that bad. Some bounce in the HDFC twins. Sarvendra, would you take a trade here, HDFC or HDFC Bank?
I think both at their longer term averages, especially Bank on the longer term averages, and I think HDFC itself has broken the long-term supports. But going forward, I think if someone wants to play a bounce, we are slightly oversold. So as long as the HDFC holds 1720, 1730, you could purely from a trading angle look at 1770, 1780, nothing beyond that. And for HDFC Bank also, I think you could probably look for a bounce, but you should be just looking at a bounce still around 1050, 1060. Beyond that, I think would be difficult for both of them to hold. So eventually, I think they should break lower. But for the time being, yes, a couple of points on the upside possible.
Let's pick up this sugar pack and see what's been happening there. It's a very volatile basket nonetheless. Days of heavy cuts, and then you have peaks being made on counters. Berhampur Chini today is down. We've got a 9% dip on Dhampur Sugar. Like I said, very volatile cuts. Sri Lanka Sugar is down about in lower circuit, so 5% down for Sri Lanka, 10% down for Bajaj Hindustan. Again, lower circuit for this space. What's happening here, Avinash? I mean, it's very difficult to gauge. The news-driven space. One day you have a positive announcement coming in, the stocks all up about 20%, and then follow-through doesn't come in.
No, I think we did see a good rise, in most of the sugar companies once the ethanol policy was announced. But clearly, looking at the current year's demand-supply equation, our sense is that we could see sugar prices coming under pressure, and I think most of the companies which are even integrated players could possibly face the brunt of lower sugar prices. So I think in that scenario, Devina, it makes sense to actually stay away from these companies. Our sense is that the second and third quarter for these companies is going to be extremely bad in terms of margins, and I think that is what the market is actually reading into these prices. So overall, I think it's going to be a weak set of numbers for the sugar companies. So I think it's better to stay away, because probably some more cuts on the sugar prices could not be rolled out.
Okay, got that. Titan Industries, I should pull that up because it's a regular feature in terms of what our viewers would like to know about the stock now. Approaching the breach of 805. It took it down in intraday trade, once again bounced back above it, so trading at 105 right now. What would you do, Brijesh, with the Titan right now? I mean, fundamentally, you did have an international brokerage house giving a target price of 720 on the downside, but our technicals suggesting otherwise.
See, no doubt from a level of 920, 925, we have seen drifting to the level of 775. We have seen a sell-off. Till 770 doesn't break, I think one can take a buy side. Anything below 800, one can take a buy call in it with keeping a stop loss 770 and look for the target of 845 to 850 purely from a trading point of view. Till 770 doesn't break, I'm not looking at anything going below that level. If anyhow 770 breaks, then the important support lies at 740, 735 to 740 juncture. So I think the stock should trade in the range of 735 to 850 juncture. If it passes more time here, then we can see a bounce back to the level of 925. But as per very short term has been concerned, 800 below that we should be a buy call with a stop loss 770 and look for the target of 825 to 830 juncture.
All right, pull up JSPL right now. The start of the show, the stock was down closer to about 13 or 14 odd percent. It's down about 11.5 odd percent right now, 197. Sarvendra, what would you do with the JSPL?
I think today's bounce, the way it bounced back, I think clearly 160 is 160, 180. That area is definitely. I think 180 is, mind you, 180 is the area where it is acting as a good support for the stock. Last couple of bounces also from that very particular level. So I think if I go and look at the last couple of months, I think 180 is acting as a good support. The bounce from there today looks pretty decent. Volumes have been brisk. I would say now that as long as we stay above 180, the stock could probably pull back towards 210, 220. So anybody wanting to have a look at this one, I think clearly it makes a trade on the long side. If you're buying around 195, 196, you should be looking in for 210, 220 as a target. And in that case, you should be keeping a stop loss. You should be keeping a stop loss below 184.
Okay. Just the sheer madness in small caps, though, is something that is worth talking about. I know we've been fixated by what's happened to the large cap losers, but the small cap index should come up on your screen. It was down about 0.48%, or rather 4.8%, and currently down about 4.9%. And this takes, as we've been talking about, the levels and the divergence to abnormally high levels. SAIL, which has announced capex amongst the favorite names in the metal space, prices are high, is down from those levels of 100 or down to about 68 currently. Sterlite Tech, by the way, a really stable name, lots of promise of growth, 294 down 7.5%. Future Consumer, and I think the target prices are northwards, the consensus target price on Future Consumer is northwards of 70, and the stock is trading at 38 or 39. Arvind is down about 5% to 317. So a lot of pain into some of these names. Before we get in closing strategies, Avinash, one point, I mean, these are all stable mid-sized names which have all fallen. What do you think, an Arvind or a Sterlite Tech, for example?
No, I think Neeraj, Sterlite Tech, as you rightly mentioned, I think definitely seems well positioned for growth. In fact, the recent telecom policy which was announced has clearly indicated that the thrust on optic fiber is going to continue in a big way. So I would believe that, I think investors should actually look at this opportunity to actually build in, stocks like Sterlite Technologies in their portfolio, largely because I would believe that fundamentally nothing has changed. I think the earnings growth trajectory for the next 2 years is going to be extremely strong and driven by a large order book and obviously margin expansion, which is going to actually happen because the kind of valuation they'd make. So I think clearly, use the fall as an opportunity to accumulate these kind of stocks.
Okay. Some news bits, and we'll analyze this just to mark it before we get in closing strategies. From Bloomberg News is reporting that KKR Blackstone are said to have shown interest in a $3 billion Shriram deal. P firms essentially are eyeing. Preliminary talks are on, so this is probably early stage as yet, but the P firms are set to seek Piramal TPG stakes in the Shriram group, and the Shriram companies should come up there. Some of these could be active. We'll get in more analysis on this as well in moments from now, but first let's get in closing strategies from both our technical experts. Brijesh, to you first, your top closing strategy.
I have only one buy call right now. The Indian Hotel on a hourly chart, the stock has bounced from a level of 130 to the right now has been creating at 137, increase in volume, oscillator making a higher bottom formation, which is giving a bullish sign. So somewhere around 137, 136, one can take a buy call. Keep a strict stop loss of 133 and look for the target of 140 to 144.
Sarvendra, what about you? Your top closing strategy?
I have a BTST and I have an STBT as well. BTST, I think one stock that I like now is L&T Finance, where I think a double bottom at around 120, and on a day where the small cap, mid cap indexes have been battered out of shape, this is one stock which is closing in the green. So a buy there for a target of around 134 for Monday, keeping a stop loss at 128.10. And a solitary sell on STBT on RBL Bank, where we are breaking previous lows and closing below that. So look to short sell for a target of 505 on the downside. Stop loss kept at 517.10, and both are spot levels.
All right, we're just about 7 minutes left to go for market closing. Just to dwell a little bit more on the flashes there that are coming on your screens. This was happening since some time now. The news was out in the market since a few months, and Shriram Transport Finance and Shriram City Union Finance, they were in early stages in talks for a merger. This move was actually aimed towards the listing of the holding company, Shriram Capital. So now we're getting more details on the same, that PE firms are set to seek for a multi-BG stake in this particular merger. $3 billion, that's what they're talking about this merger is worth. So whether or not this is a binding constraint to merge Shriram Transport Finance and Shriram City Union Finance for the listing process of Shriram Transport to go solo, that is something that you need to also watch out for. So those are the two stocks. They're both of them down 1.5% apiece. We're about 5 minutes to go for market closing. Would you completely stay off, the small cap and mid cap space, Avinash, right now? Because it's really unpredictable.
See, I think as of now, I would believe that, the frontline stocks itself have corrected quite significantly. And I think there is definitely no doubt about it that the risk quotient on the small caps is much higher than the large caps. So I would believe that, when you have large caps, actually trading at, lower kind of valuations, it's better to put, some sort of defensive strategies, especially in sectors like auto components, IT, pharma, or for that reason, even, autos, typically something like a Mahindra & Mahindra, which has been beaten down badly. So I think clearly large caps would be the best, defensive strategy as of now.
Yeah, well, that would be and makes maybe sense, but just the selling in the mid caps and the small caps, I'm amazed at the quantum of sales that are happening in the way some of these stocks are selling off. I don't know. I mean, I think the mutual fund data, particularly the small cap end of the market and maybe some of the PMS schemes, would be very interesting to note if there are some outflows, because some of the schemes and some of the managers in the AMC space that I've spoken to who have PMS schemes, who have small cap schemes, haven't really seen massive outflows from their funds. So it's just difficult to understand how this is happening. Anyways, we talk more about this. Just one last question, Avinash. For some people who are looking at an event, the gas price revision that will be announced, I think ONGC and the likes have already rallied ahead of the event too. But with this going to happen, do you think the stocks are already pricing the benefits in, or could there be some more here?
No, I think some more price, incremental price would definitely happen. I think we saw that JSPL has already moved up by about 4 to 5%, but I think earnings growth and trajectory would definitely be, impacted positively for FY20 numbers. So I think JSPL definitely at the current valuations, if somebody is willing to take a longer term kind of call, definitely it is one stock which possibly one could definitely get a better risk reward. So I think JSPL looks definitely attractive.
All right, got that. A few stocks doing okay for themselves today, likes of an L&T Finance. Sarvendra, anything on this stock?
Yeah, just now I initiated a long trade here, and I think a double bottom at around 120, and the stock has been able to perform today, even though where the mid cap and the small cap indexes have been beaten out of shape. So my sense is that 120 thereabouts could be the worst case for the stock in this decline. And you should be looking in for a larger pullback as well. I have put in a BTST with a target of 134, but anybody wanting to have a week 10 days kind of a view, you should be looking at a target of around 145 to 150 on this one.
All right, 2.5 minutes left to go for market closing, and this is going to be a disappointing close to the week. Neeraj is here, he's wrapping it all up for us, but nonetheless, we've still not taken down the 10,866 mark, so that's probably the silver lining there.
Yeah, and maybe off the lows of the day, if that is another silver lining, the Sensex is just about 0.25%. But that's the point. Well, the market is not sold off so much. The Nifty Bank is ending in the green. It seems to be a day which is extremely disappointing. Maybe because of the way the mid caps and the small caps have cracked. Those indices will come up on your screen. And look at that gash. The Nifty small cap is down 5%. The mid cap index is down about 2 percentage points. The sell-off is just too brutal at the broader end of the spectrum. Well, they've been asked to do the hard work of spotting all of those names. Let me talk about the large caps first. And on close, surprise, surprise, Axis Bank has a 3% gain. HDFC Bank and the HDFC Twins, by the way, have done reasonably okay for themselves. Bajaj Finserv ends in the green, which is not a bad sign. HPBP doing reasonably okay, and ITC about 1.5% higher. So there have been some heavyweights which have gained, which is helping the index do well. But look at these gashes. Yes Bank 10%, Indiabulls Housing 9%, Hindalco, Tata Steel down, and the autos. So Hero Moto, Bajaj Auto, Maruti, all of them have cracked, and today Bharti Airtel too has shown some gashes. So the problem is that the ones that have fallen very, very strongly. The gainers don't have such substantial gains to themselves. But the broader end of the spectrum, and so much pain, Devina, at the mid cap and the small cap end in particular.
Well, definitely. I mean, you wouldn't call 5% on the small cap index a small cut, but yeah. So the pain is pretty widespread, and just to pinpoint a few of them where it's been a bit more exaggerated, mid-cap index is down about 2%, the small-cap index has taken a heavy knock today, is down about 5-odd%. A stock like Infibeam, by the end of close, remember the intraday will show you the kind of pain that's had. There's been no sign of a recovery on the stock. It's just been one way down. 71% by the end of trade today for an Infibeam at a 57 rupee. The stock's become 57 rupees right now. Lakshmi Vilas Bank is the other one that's seen some amount of pain building up. 19-20% on lower circuit for Lakshmi Vilas at 71. Eros International is the other one that's seen double-digit losses. So all these names have seen double-digit losses, and lower circuit there for an Eros as well. That's 20% cut given up. Indiabulls Real Estate. JSPL is the other one that sees pressure today. Indiabulls Real Estate shuts shop closer to 90-odd rupees. JSPL 12% lower, 195 on the stock price. Rajesh Exports, JP Associates, and KPIT Tech, actually, the stock in the last two trading sessions carrying forward from the losses yesterday of about 8-odd%. Today with the loss of about 11-12%, 20% knocked off in 2 days. Among some bright spots in trade, you had an Indian hotel which was up in trade today. So that stock did okay, 7.5% higher at the highest point of the day. A DB Corp, a stock like L&T Finance, and Sarvendra said he did initiate a buy position on that stock. So L&T Finance is doing okay by the end of trade, 3.5% higher. Canfin Homes, so some bit of a bounce back, some shorts getting covered there. You have some interest building up back into the stock. Oil India and Bajaj Electricals amongst the other few names that sees some ray of hope in today's session. But nonetheless, it's the close of the week. The Nifty shuts shop about 0.5% lower, still holding on to that low of 10,866, but disappointing week nonetheless.
Yeah, very disappointing week. And just before, we have also got that exclusive story that we're going to talk about, but should highlight, Devina, what's happened in the week gone by. And the numbers will come up on your screen. This is the 5-day performance. And again, well, yesterday we were talking about the series to series performance. Not much different from the 5-day performance in that it's got Yes Bank, it's got Indiabulls, and it's got Maruti as the top losers.
So autos and financials, the key underperformers within the week. And for a weekly change to see a number like 18-20%, that's a little disheartening. But on the flip side, a good going for IT. TCS rakes at the top, 4%. An Emphasis up 3.5%. And Axis Bank does okay. And Reliance Industries, so heavyweight there, perched at the top, not bad.
Yeah, for now, doing okay. Let's see how long does this last. But final thoughts from our experts then. Sarvendra, to you first. What levels do you envisage come next week?
I think going forward for Nifty, 10,866 would be critical. The only thing is that today has been the monthly and quarterly close, so we will have a more detailed look as to how individual indices and stocks have performed. And I would the picture would not be pretty. I think the quarterly, monthly closes are not looking good. So if we were to follow through into this monthly and quarterly close, which is weak for the Bank Nifty and the Nifty as well, I think I would say that at least the next fortnight could be slightly weak to down, and eventually 10,866 will be broken, and the longer term averages also for the Bank Nifty which have been broken will be simultaneously broken for the Nifty also. So once you start trading below 10,750, 10,800, I think the weakness could intensify, and this would ideally not end before we sell off a little more. So I would say that this is just the start, and even your cycles give you much worse, and we are still probably much better off. So I think a sell-off towards 10,500, 10,200 cannot be ruled out going forward next fortnight.
Okay. All right, Brijesh, what about you?
Yeah, no doubt the trend on a longer term time frame of a chart has been negative. 10,550, 10,800 are the two downside level which I would be watching very carefully. If we talk about a selling zone on a higher side, 11,150 and 11,300, 11,100, 11,150 and 11,300 other resistance. Anyhow, if we trade in this range of say 10,800 followed by on the higher side 11,150, it would be good for the market. But I'm not looking anything promising from a heavyweights, only SDFC or Reliance which have contributed, or right now ITC. But overall banking has to perform well, so to move up Nifty to the 11,200. Even the Bank Nifty should not break the recent swing low of 24,560. So overall it's been little bit negative sign. But if it comes near the support juncture of the swing lows, definitely one can take a buy side for a short term play.
Gentlemen, thank you so much for taking the time out and joining us and giving us those perspectives, and all the best with your trading next week as well. Okay, now just before we get into the Bloomberg exclusive, and we'll just get to that in moments from now. Interestingly, I missed this, came about 15-20 minutes ago, or 19 minutes ago to be precise. But Rana Kapoor has tweeted that, whatever, I mean, my promoter shares of Yes Bank invaluable to me, eventually bequeath promoter shares to my 3 daughters, subsequently their children. I'll never sell any of my Yes Bank shares, even after I demit office if the MD and CEO of Yes Bank.
Interesting.
Well, that's the company in the eye of the storm. That's arguably the promoter in the eye of the storm as well right now. And some messaging coming in from his side. Anyways, back to the exclusive story then.
All right, the Bloomberg exclusive, KKR and Blackstone are said to be interested in acquiring stake in Shriram Group. George Smith-Alexander of Bloomberg News, he's joining us right now with more details. George, what have you been picking up?
Hi. So it's a slightly complicated deal. From what we understand is that private equity investors, be it KKR, be it Blackstone, these guys have been in talks for some time now. Interestingly, it's not a straight deal, because what they want is a stake in a merged entity of Shriram Capital, Shriram Transport Finance, and Shriram City Unit Finance. If you look at it, Piramal Enterprises have stakes in all these 3. So what these investors are looking for is stakes of Piramal Enterprises, part of the stake of the trust, and also the TPG stake in Shriram Capital. So it would be stakes of all these 3.
All right. Any clarity in terms of the merger itself?
No. So the merger, I guess there have been talks with parties among each other to get that over. I don't think that has yet fruitified. They need to finalize obviously the valuations and stuff like that. Plus, on the top of it, this is a large deal. If you look at it, it's a $2.5 to $3 billion deal. Would be one of the largest in case if any of these investors come in, because if you look at it, just the trust per se, the trust needs. The trust needs to pay off some of the employees for years of service which they have rendered. As far as Piramal is concerned, obviously he wants an exit. TPG always has been looking for an exit. So a lot of investors who are out there who wants an exit, and the only way out, from whatever we understand, is post a merger, which is happening, not pre-merger.
George, just one question. So there are 2 preconditions as I see to this. One is that there needs to be a merged entity in which these promoters want, these PE investors might want to stay. And 2, I read the flash which is out there on the terminal which says that this is just in the very initial stages of a negotiation. So even if this were to happen, it would take a long time, and there could be a slip between the cup and the lip.
Yeah, the talks have been going on for I mean, at least the talks with KKR has been going on for from last year. Talks had been initiated with Blackstone. Now the issue is obviously with stuff like IIFL which is out there. Those talks have stopped a bit. I guess talks would restart hopefully once this model, once there is a bit of clarity on what's happening on the market, because obviously no one wants to come in when interest rates are going up, and when interest rates go up, obviously there is NPAs which are going to come out in the open. So I guess these investors want a clarity before they get in, and also by that time Shriram Group needs to fix up on the merger.
Just one last question. So this interest that's coming in, obviously, while it's not a prerequisite or a binding constraint to merge Shriram Transport and Shriram City Union Finance for the listing of Shriram Capital, this interest that's coming in can come into all three individually, or they will wait for the merger to happen?
They would wait for a merger to happen, because they do not, so none of the investors would want to have a stake in a unlisted holding company where they would have a problem in exiting, because exit obviously, for these investors, exit obviously is a big thing. And a merged entity obviously makes also a lot of sense, because then it is a much larger size and you can maneuver. And I guess, once a merger happens, they would also be the stakeholders for the other insurance and other entities too. It's like a holding company which gets merged, but in this case, it also has some of the other companies there.
Okay, got that. George, thanks very much for joining us with that story. Well, with that, it's a wrap on this edition of Countdown. I thank you for myself, from Neeraj, and the entire team that put this show together. It's a good weekend, hopefully.
Yep, and we wrap up the day's action on the Bloomberg Quint Market Wrap. That's coming up next. Stay tuned.
Good news.